What's up, YouTube? It's Joe Cachapalia sitting on the couch, making some money, investing in fractional real estate online, as usual. Today I'm on Mogul again. If you're not familiar with Mogul, I do have a playlist for this. So if you go to my channel, you can click and watch from the beginning, my first impressions of the site and then some of the other properties that I've looked at. That'll be especially helpful today if you go back and look at the prints. This was a pad split in Atlanta, Georgia. The property we're looking at today is going to be another pad split style property in Decatur, Georgia, which is basically just a suburb of Atlanta. If you watched my last video about the prints, I had said I was gonna do an updated one, another one, but they sold out already, and so I don't think that makes a ton of sense to go back and do that. It sold out amazingly fast, considering 2 days ago they didn't have the analysis tab up yet. So I think that a lot of people are buying before they even see that. They're just trusting, the top line yields that Mogul's telling them. Um, I find that to be a little bit scary. I want to do all my own due diligence, and I think you should too before you buy, excuse me, any properties. You want to look into the platform, into the properties themselves. I do have a link in the description below to the Mogul referral link, and so if it's your first time buying on there, you can get a free $50. There's terms and conditions. You just want to read that yourself again, do your own due diligence. I also have a link to our Discord in there. So if you want to jump into our Discord and just it's just a generic fractional real estate investors Discord server I set up to talk to other people that are interested in investing on Mogul or on Lofty or on Collab or any of the other places, Arrived Homes, or there's discussions going on about all those things. Really just trying to share ideas, trying to help, especially in how we can approach some of the platforms and ask for certain types of transparency or, certain changes. We're already doing that quite a bit on Lofty, sharing ideas and then going back and talking to them about it. And, I think a lot of the sites are open to some feedback right now. I know Mogul is. They're doing a lot of webinars. They're doing a lot of, you can schedule a call with them. I've talked to, a couple people from there a few times now. But anyway, let's jump into looking at this property. It's the Mafee. It is a 7-bedroom, 2 baths in Decatur, Georgia. I'm not going to go into the Atlanta market again, which is what I normally do when you're looking into a submarket like this. If you just jump back into the Prince video, you can see that. But I did pull up the Decatur, population growth, which is just, on the Wikipedia page. I did, obviously, whenever I'm doing these videos, I'm just jumping through the highlights of the due diligence. If what I would do is I take the time and actually try to read about the market, try any of these sites. Wikipedia is my favorite one, and this is the number one thing that I look for. You have booming population, um and then the other thing, oh yeah, let's see, I think I closed my tab. But you did have the home prices have gone down a little bit in the last year indicator, despite your rapid growth. And so not exactly sure what caused that, but Zillow is predicting, increase in prices going forward, in this market. It's something that you might want to look at. Obviously, this property has a very strong cash on cash return, and that's responsible for a lot of the yield. I had actually shut off their refinance assumption, um, just to see. They're projecting 16% IRR. You can see most of that returns coming from the cash on cash. That's what I actually like to see with. I think that they're doing well with these properties. They are starting to do some other things to make it look, make your returns a little bit stronger. Um, Having really strong rental growth, really strong appreciation, especially where where you lost value in the last year in home prices. So I don't know how much I trust their IRR at the moment, but their cash on cash does seem to be pretty accurate, at least on the ones that I've started to get paid out on. It's still very new to this platform, just like all of these fractional real estate investing sites. They're all fairly new and still in experimentation mode as far as I'm concerned. That's why I'm not dumping my whole net worth into any of these, right? I'm just starting to dabble, starting to, trying to learn about them, invest in deals, but not going crazy just yet. Um, But so let's see. Talked about the market. Um, did we do some math about? No, we didn't do that yet. So let's see. Um, looking at their top line rental income, right? What do I want to do there? I want to make sure that that seems to line up well with what they're renting per room. So 48,000 divided by 12 to get us monthly. Actually, you know what we should do is divide by, what am I thinking? Here, let's do this. I think we can do this a smarter way. 48,000 divided by 52, because we're doing weekly rents, divided by 7. Uh, yes, so $131 in weekly rent, $131.86 is what they're predicting per room. When I looked on Padsplit, this is the neighborhood. Like if you zoom in, we're right around here, and so they have a couple of available ones, not in our building, but nearby. And so I took the lowest one, right, $180. Um, so let's see, we divide this by 180. And so that means they're expecting to be about 73% occupied, right? Or that's at $180 per room night. You need to be about 73% occupied to hit this 48,000. So that seems like a pretty conservative projection to me. Now, one of the things when they're talking, what I think they might be doing is this might be like after Padsplit's fees, right? Because that would make sense why it would be so low, so much lower than it's not 73 seems pretty low to me as a percentage of the total. So that's what I think might be going on there because it's not clear, only 10% property management, which Padsplit usually takes a decent amount of that, and then you also have this like secondary management function that you have to pay somebody for. But then again, they also have this, you've got some miscellaneous expenses, and so I'm not sure. But anyway, really, the thing that I think that we can test the strongest is this top line rental number, and I feel really good about that. And I don't think I pointed out this note, but you can see, they're saying it's currently 100% occupied, and the actuals are above their year one underwriting. Well, I definitely believe that because it seems like they're trying to be pretty conservative there. Although I don't necessarily, with their appreciation and their very low expense growth, I don't know that that's I don't know, especially where inflation has been. I mean, who knows? I mean, but your expenses are really more like your utilities. It's not like a lot of things that they're buying. So not sure there. But overall, I usually do feel pretty good about their numbers. But one of the things, so let's see, did that? I want to just point out FEMA. Checked the flood map. It looks perfectly fine to me. I mean, you can see a floodplain over here, but it's quite a bit far away. Um, Dug into the inspection report quite a bit. There is a whole bunch of deferred maintenance. You have little bends in the shingles, lifted shingles that they say to nail down. There's a lot of like trim that needs to be addressed, and caulking that needs to be done, and cracks in between the bricks. So a lot of that sort of stuff is very similar to what we saw on the prints. If we look when we look at their budget, though, let's see. I don't really understand how they split stuff up between the two. Why they do the two different tabs. Why don't they don't just do this full analysis built into their so then sometimes that's why sometimes I get lost on here. But yeah, so this miscellaneous costs that they have is what I think they're this 15,000. So they have a $12,000 maintenance reserve. But I think that this when they use this miscellaneous cost, this is really what they're using for like getting the property ready. But this is an operating property. So I think this is the amount of money they've set aside to address some of the immediate items in here. That's one of the things I'd like them to make really clear when we're buying these is, what are they fixing and what are they not, and what's that costing them. This was like, an incorrect repair at the rear of the foundation. This looks like they just put some foam in there, maybe just to fill a gap. There is a drainage issue on the site, so that's, whenever you have a sloped property and it's something that you can have that concern with, right? Like if especially in the front or when one part of it where it slopes towards the building, you have to make sure the drainage is good. Um, Lots of stuff like that. Nothing that like was terrifying to me. It is an older property, so I expect a lot of this deferred maintenance. It is it's occupied and running, and so I think a lot of these things you're just going to expect, and you want to go and do, the sort of preventative things that keep like, make sure your roof isn't leaking, make sure that any rotted wood is addressed, and so that's what I'd love it if they came out and said, hey, these are the items we're actually taking care of. It does seem like the AC is only from 2017, so not terribly old, right? Is that what I'm seeing here? 2017, yeah, International Comfort. Not terribly old, but they did mention that they weren't able to test it because it wasn't cold enough, or it was too cold, which I think is that's just a perfectly normal thing to expect. Um, So, overall, I think it wasn't terrible, but it's not like, if this were a short-term rental, I'd expect it to be in much nicer condition than it is. There was some notes about they couldn't verify the grounding. Uh, I don't know, that's a little bit worrisome. I'd like, whenever there's something, yeah, unable to verify grounding, whenever there's stuff like that, it would be great if Mogul said, I'm sure you saw this note. This is what we did to address it. I'd like them to start doing that. Just so you know, like what they are and aren't doing. But they obviously are, setting aside some money to deal with some of these things. I just don't know which things that are. I'm not even sure what that sound is. Hopefully that doesn't continue. Um, One of the things, I did this Google Street View. I do this all the time. I think this neighborhood, it seems to be much nicer. There's not like the graffiti or, the kind of rundown commercial properties that were close to the Prince. But one of the things that I didn't think about when I was looking at this, let's see, let's switch the layers, is I didn't notice where there was a bus stop. But I know when I was looking at the other one, I didn't see it right away either. Okay, so it's right here is the closest bus stop. How far away is that? Okay, I have to stop this video and sorry about that. Hopefully that doesn't keep up. So yeah, I was looking, where's the closest bus stop? It is only 7 minutes away. I think that's definitely a 7 minute walk, so that's definitely acceptable. But then what you have that's I think a lot better here than at the Prince is their parking situation, right? You have street parking, you've got a whole bunch of driveway parking. And so, with this rent by the room model, parking is one of the things that, a lot of the experienced operators that I've talked to about this, that's one of the things they really care a lot about. And so I was worried about that on the Prince. On this one, I'm not at all. Because, like I said, I mean, there's both street parking and a lot of driveway spots. And we're just 7 minutes from the bus stop. So, I mean, there's a lot to like about it from that perspective. But the thing that has really got me worried about this one, and where I wonder what I'm missing or what they're missing is, let's see their total price on this. I end up scrolling up and down a lot. I don't know why. Yeah, okay, 300,000 is their total purchase price, and then we have on top of that reserves and closing costs and the Mogul fee. But when I look at Zillow, it's got its estimate of 237,000. Now they are missing two of the bedrooms, right? We have 7 bedrooms, 2 baths. But usually when you're doing pad split, you're really just getting rid of extra living spaces to create bedrooms. The square footages are the same, so they didn't really do anything. They didn't add square footage, so that's worrisome, right? 237. That's a big difference to pay 300,000. Um, that's what Zillow thinks. Homes.com, thought 250 to 258. This is picking up one extra bedroom. It thinks it's a little bit smaller. So, if you do 126 per square foot times the 2,200, what does that get you? 26 times 2,200. that gets you up to 277, but still not 300,000. And then, you look at this one, last sold in 2020 for 151,000. We're on Redfin now. And their estimate is 247, right? And with a range all the way up to 280. But again, does not get us to the 300,000. And so with this property, they're really asking us to pay for to pay up quite a bit for the fact that it's an operating property, right? The fact that it has the furniture and equipment, any of the things that you might need to run it, and that it's leased up in full. Um, and we're paying maybe a $50,000 premium for that, right? And that is it seems to be pretty steep, right? Like I really like their income. I believe it. I believe that you can perform like this, because they've shown to me, at least so far, that they are able to hit their cash on cash numbers, at least initially. I mentioned this a lot of times, that I am still very much in experimentation mode on the platform. As with all the fractional real estate platforms, I wouldn't put some significant portion of my net worth on any of them yet. Um, but I have come to start to trust that when they tell you a certain cash on cash yield, that they're going to be able to hit that. But I think that the IRR on this one, to me, starts to seem questionable because of where they think the value of the home is, right? Because you're appreciating a number, but they're starting off $50,000 over that number. So that seems really tough to me. It seems tough to make sense of that. Um, I don't know. One of the things, sometimes it's not always um it's not always easy to be able to figure out from these third party sites. Sometimes they're wrong, right? And we don't have an appraisal yet in their documents, and I wonder if we're going to get one. It seems like that's something that we don't see. I think a lot of times these are selling out before we even get to that stage. And so I'm curious what happens if that appraisal comes in low. But we don't have it here yet. One of the things, when I looked at the purchase and sale agreement, um, it's one agent that is, representing just the seller. Mogul is just a customer of theirs, not a client, right? So they're not doing a dual agency. Um, but it makes it look kind of like maybe this was an off market deal, because I didn't see a listing for it anywhere. Like, you can see all these last solds, but there's not. One I didn't check, and I usually do, is realtor. Let's see. Um, because that will often, you'll see if there's a current listing, you'll see it on here a lot of times. So let's see. Um, no, see, it thinks it's off market. So this seems like it's an off market deal that was brought to them. Um, maybe just brought to Mogul directly by networking with them, and they're just like, well, we're going to pay up for it because it's got great income. I don't know. I mean, that just worries me a little bit. I don't want to pay some big premium. I'm already on all the Mogul properties. We're paying like a 5% fee to Mogul, and then they have some little extra amount they're making on the management monthly. But that's all baked into their return numbers. Um, and most of the time I've been pretty comfortable with with them being able to overcome those fees by having picked really good properties and provide showing the using these different operating models, where they're doing a pad split model, or they're doing a short-term rental. Like, that's how they're able to perform well. And the fact that they're doing interest only financing, I think all of that is um part of what makes it work. But I don't think it makes it work so well that you can overpay so much for a property, right? And so um I don't know. I'm not sure which is going on, right? It's possible that I've just got it wrong, right? And that Zillow and Realtor and Homes.com just aren't pricing this properly. And sometimes that does happen. Um, Usually don't see it in markets where it's a subdivision like this one is, and it is like, you know, a lot of relatively similar homes. So I'm not sure. I'm not sure what's going on there. That worries me a little bit. I did want to jump into the crime map though, because after the doing the Prince video, somebody mentioned, crime in Atlanta being higher than an average city. And I think that if we had looked at this on the Prince, although we didn't, my assumption is it was going to be pretty high because, you did have the dilapidated commercial buildings and you had a lot of graffiti. Here, this is, I pulled up the spot crime map, put it in. You have to remember it's always going to give you a pretty similar number of icons. You have to see how long it took to get all of them. Some of the markets that we've looked at, it's pulled up this many in one day. But this is going back, 2 full months just about. And so that's, to me, made me feel pretty good about this area. And especially when you zoom into the actual subdivision, I mean, you just have nothing happening right here, right? Like anywhere between where they are and the bus stop, that seems like this is, and, when you look at the map, it just does, it looks, from overhead and whatnot, it just looks like a pretty suburban area. So it makes a lot of sense. From that standpoint, the houses are far apart. It's not like there's not, uh, you know, it, this didn't surprise me when I looked at this area on the map. That then when I pulled it up on Spot Prime, it looked pretty good. But again, if it's something that is concerning to you when you're thinking about your investment properties, you can spend a lot of time digging into here. There's a lot of other ways that you can look up crime statistics too. I just like this one because I like to think in pictures a lot, and so to be able to see, okay, what happened nearby recently, and how close was it, right? And so I really like, they spot crime had to pull a pretty big area. Like if you think about some of the ones we did, they really just narrowed in on the neighborhood. So no, I felt really good about the crime. From this map made me feel good. So let's see. I just want to recap, make sure I didn't miss something. Checked out the crime, felt pretty good about that. I think their income numbers seem to be underwritten pretty well. As far as looking at top line revenue, it looks like they're being really conservative with it. The biggest thing, the biggest questions for me, in the parking on this one looks much better than the other one, right? So which is important, I think, with this Padsplit model. The biggest questions for me are, which things in the inspection are they going to address? But they did set aside $15,000 to address something. That seems like a good amount for, I would feel pretty good if I had budgeted that much, seeing the items that I saw on there, wanting to address the most pressing ones. Um, without digging into things too much deeper, I feel that pretty good about that. But I mean, the valuation is just it's really hard for me to get past. If you look at all the properties that I buy on Lofty, I'm always trying to get low basis basically. One of the things I've started to say more often, that I heard a long time ago, and I don't know, but it's, vacancy is temporary, basis is forever. And what does that mean? Like, if you, so I say it a lot on that site when I think about things and talking to people, because when the house is empty, and they're collecting no rent for a month, they shut off the yield basically, and so it looks like it makes $0, even though the value of that home didn't change from one month to the next, but the token prices on there swing quite a bit but it's just the vacancy, right? But being able to buy low, uh, you know, the real estate prices don't move as much as the income does, right? And so this is sort of the opposite of that, right? We're getting, it is 100% full when we're buying it. We're getting a good yield, but it is, we're maybe just paying too much to where, they might have to just hold on to this forever, because there's not, it might be, you might be talking 15 or 20 years out before you can actually sell it with a, with a good, I mean, I don't think it'll be that far. But it is, I think that you're going to end up further out than what they're predicting. Um, I say that at the same time, you might find another buyer that comes in and says, "Hey, I want an operating pad split. You're making good money. I'm willing to pay up for it a little bit." And that's one of the things I'm just not sure about yet. I don't know. Should we be looking at Zillow and, Realtor.com and Homes.com to value these? Or can we start to look at these a little bit more like commercial properties, and will they trade based more on their cash flow? And if they will, well, then we have to figure out what cap rate we're going to use and everything like that. At the moment, I'm not really comfortable with that because this is a model that I only ever heard of for the first time, I don't know, probably 3 or 4 years ago. Um, I mean, rent by the room and rooming houses have been around for a long time, but this company Padsplit that's doing it the way they are, and we're sorry about that, having lots of problems tonight. Had to free it froze again. I get the first time I shut it off, but this one froze. But yeah, it's a model where it just hasn't been around long enough that people are really trading these based on the income. I mean, I think the most probable sale is back to somebody who's going to use it as a regular single family home in the future. If that's the case, I think we're overpaying for it. At 300, if the most of the platforms are saying 250 is the right number. Um, it's tough to know. It's tough to be sure which one is right. I have started to trust these guys, as business people, as real estate investors a little bit because I think that when I compare their properties to most of the other properties on most of the other platforms, I think that they are doing a lot of stuff right. And so, um, that's one reason to maybe think that they've thought that through. It's definitely something I want to ask them about though. And then also to find out if they have an appraisal. Now, we're in a tough spot here because, I had questions on the prints and it sold out before I was able to get any answers to those. I don't want the same thing to happen to the Mafee. But, one of the things to just keep in mind is like it's not the end of the world if you miss one because there's going to be another property on this platform next week or on another one next week or so I always err on the side of just not buying something if there's too many unanswered questions for myself. um that's why I'm always trying to share all the things that I think about with these properties. It's that sort of mindset has done really well for me over the years investing in properties in real life, and I just think it's uh I strongly believe that if you're a real estate investor and you stick around long enough, you're just going to be very well off someday in the future, right? Like, I mean, it gets to a point where your income from real estate passes up your income from your job, and that happened for me a few years ago, for the first time, even after having sold off a lot of the portfolio at one point in time, when I was sick and out of work. And so, it's a model that I really believe in, like buying income producing properties. Um, but I think that the sticking point of that sentence is if you stick around long enough, right? If you end up buying, and so that's why I'm always trying to avoid the money losing situations, right? Like as long as we don't lose money, um, you know, you just end up doing, well in the long run. But if you, and so that's why I'm always willing to just pass on a deal. There's no, and there are deals that I didn't buy that I'm like, oh, I wish I had bought some more of that one, or, but there's plenty that I didn't buy that I'm sure I would have lost money on, right? And so that's why I'm always trying to err on the side of caution. At the same time, not investing in anything, I think, is the bigger mistake, right? I think that leaving money in cash versus having it in some income producing asset, I think I think that's the real mistake. But I think that passing up any specific piece of real estate is not a big deal because there's next week or tomorrow there's always another deal to look at. There's always something else that we can put some money into. Um, and then I think one of the things that you've seen me do, which I love that you can do in fractional real estate and you just can't do in real life, is if I'm really not sure, I'll just buy a little piece of it, right? Like, and then you can sort of hedge your bet a little bit that way, right? Like, okay, the ones that I love, I'm putting a big chunk in, and the ones that I'm sort of on the fence about, well, let me just put a little tiny piece. And if I can build, if I'm taking a little bit more risk than I normally would have, but I'm taking doing that with 100 properties, well, now the diversification of the risk helps to protect me a little bit more, and maybe it makes it okay. It doesn't mean that I'm just going to buy one of it. I've talked to a couple investors that have just bought every single property that certain platforms put out. Like every time a new property comes up, they just buy X dollars of it. I think that's super reckless, right? Because I mean, the whole reason that I want to do due diligence is because some of these properties are just obviously trash. Like, not, I haven't run into any yet on Mogul. That's why, um, I really have started giving them the benefit of the doubt because I do think they pick better properties on average than I see on most of the other platforms, as far as like from a returns perspective and from what their strategy is from their markets. But a lot of the platforms, if you just bought every single thing that popped up, and even this one, I'm not buying every single one that pops up. But I wouldn't feel terrible putting a little bit in every one and then bigger chunks of the ones I like. I wouldn't think that's a terrible way to go about it either. But there are some that I'm just passing up completely. Anyway, that's my thoughts on this one. Really, still not sure if I'm going to buy some of it or not. I'm probably going to talk to them or try to talk to them and find out if there's been an appraisal yet, why they think that the value is so much higher than what Zillow and Realtor and Homes.com thinks, and then what repairs they're going to do. And I think that's all that I really want to know about it. Please do comment if there are specific things you'd like to know, or things that you've looked at, or things you think I missed when I talked about this. Most nights I actually just hit record and do these whole things. I had all kinds of problems today. I think I had to stop it twice during this recording, but I actually had two that I trashed. And so it's possible that I think I covered something and that, it ended up in one of those trash recordings. And it's also possible that I've repeated stuff, and I'm sorry if that's the case. Um, so yeah, if there's other things that you think we should talk about with this property, please let me know. Always excited to have people jump into the Discord and talk about it on there. There's a link in the description to the Discord, just like there is to all the different sites that I mentioned today: Lofty, Mogul, Ground Floor, any of them that I invest in, I put a link in the description to. Um, and then yeah, or just jump in the comments and talk about it, because I really like it when some of you have been adding some specific data about environmental risks or crime, and I love that that's going on. I think it's super helpful to people who are maybe not as good at looking at stuff up, or just sort of gloss over that part of these things. I think it's very important to just think about, protect the downside. And I really believe the rest of it will take care of itself as long as you're putting your money to work. I think that, and rule number one, never lose money or don't lose money, something like that. This is the Warren Buffett thing, right? Like his rule number one and two basically is don't lose money. Um, and that's really that's really where I stand, and that's why I have a hard time on this one wanting to buy it for more than I think it's worth, even if it does have really good income. Because what happens, think about this situation. Something happens that makes it so the pad split model is not legal anymore, right? They start to say, oh, you can't, like, so a lot of cities have, you can't have more than 5 or 6 unrelated people living in a home together. Like, they could decide to do that here, right? And then all of a sudden now I just have 6 bedrooms, and now it's not or as profitable. Whatever the answer is, I mean, I think this is a pretty established business model, especially in Atlanta, so I'm not super worried about that. But it's something that I think about. If that happened, that's not beyond the realm of possibility. And then we had to sell this property as a single family home. Well, it doesn't really seem to work like that. It work for that. Um, then we could look at, well, does it work just as a regular rental? Oh, and that is something that you can just use their toggle for, right? Use their long-term rental tab. And then, oh, all of a sudden this looks like a terrible deal, right? If I'm actually surprised though that at least has a positive yield as a long-term rental. But those are the things I like to think about. Most of the time, I want to think about, can I sell it and be okay, right? I don't like this having to switch models, because especially like if it's a short-term rental, it's almost never should be a good long-term rental and a good short-term rental. So you're like having to compromise on one thing or another when you're making a property fit for both. But I want to know, hey, if this doesn't work out and we need to sell it, I'm not going to get hurt too bad. And this is one where it looks like maybe we would. So hopefully I'll find that out. If I do, I'll post an update video to this. My guess is it's going to be sold out before I get to do that. So I don't know. Let me know your thoughts. And that is it for me for today. Until next time, I'm going to keep making mistakes so that you don't have to.